All right, April 16th, pre-market. The truth behind the S&P 7,000 milestone. Has the bull market just begun? Haha. Greetings everyone, I'm James and it's currently 6 a.m. Eastern time on April 16th. Last night, April 15th, the US stock market experienced a night for the history books. For the first time in history, the S&P 500 index closed above 7,000, while the NASDAQ composite also hit a new time high. Yes. Here we go, S&P, NASDAQ, yes, all-time high. And let's see, the S&P, the S&P closed at 7,022.95, 0.8%. The NASDAQ closed at 24,016, surging 1.59%. And the Dow Jones Industrial Average bucked the trend with a slight dip of minus 0.15%, closing at 48,463.72. Now, why can the index forcefully break the ceiling under the shadow of inflation? Because last night, a single word was spreading like wildfire through the market. Peace. Trump publicly declared that the US-Iran conflict was very close to an end, causing the previously hyper-tense risk-aversion sentiment to dissipate instantly. But is this truly the beginning of a new bull market or merely a final frenzy on the edge of a cliff? Let's begin our in-depth breakdown now. So let's talk about geopolitical maneuvering. The Trump peace bet is underway. The core driving force behind the indices surge last night was an interview in which Trump stated, "We have completely defeated them," them being Iran, while also hinting that the blockade would end very soon. So, some of my thoughts: the market is currently placing a massive wager, betting that restrictions on the Strait of Hormuz will be lifted ahead of schedule, specifically before April 24th. Now, although West Texas Intermediate crude oil continues to trade within a volatile high range, peace expectations have already preemptively driven down the discount rates applied to tech stocks. However, a word of caution: current reports from the Pentagon and US Central Command, otherwise known as CENTCOM, will indicate that the blockade remains in effect. Now, if Trump's statement turns out to be nothing more than a campaign-style slogan, then the 370-plus point gain the NASDAQ posted last night is a pure market bubble. So my question to you is, do you believe this current market rebound is grounded in reality, or is it merely driven by Trump's rhetoric? Give me a 1 if you think peace is within reach. Give me a 2 if you think it's just a slogan. Again, do you think this current market rebound is grounded in real reality, or is it merely driven by Trump rhetoric? Give me 1 if you think peace is within reach, and 2 if you think it's just rhetoric, okay? Now, let's talk about the semiconductor bellwether, the two-sided mirror. In ASML's earnings report last night, the semiconductor equipment giant ASML released its earnings report for the first quarter of 2026. So here are some of the key figures. Net sales, 8.8 billion euros, meeting expectations. Gross margin, 53%, hitting the upper end of guidance. Explosive signal. ASML significantly raised its full year revenue guidance for 2026 to a range of 36 billion to 40 billion. So what are some of my thoughts on this? The most critical takeaway isn't yesterday's profit figures, but rather the fact that the company raised its full year 2026 revenue guidance to between 36 billion euros and 40 billion euros. So what does this imply? It signifies that orders for AI infrastructure components are already backlogged through 2027. As long as ASML's order backlog persists, it signals that semiconductor manufacturing capacity will remain in short supply next year. And this establishes an incredible solid floor for the long-term valuations of Nvidia and TSMC, Taiwan Semiconductor, ensuring that the growth narrative for these two giants remains unbroken. The rally in semiconductor stocks last night represents fundamentals declaring war on the short sellers. So having said that, my question to you is, regarding the AI sector, do you believe that the hardware side still holds the most potential, or has the focus already begun to shift toward the application side? Give me a 1 for hardware and give me a 2 for applications. Again, regarding the current AI sector, do you believe the hardware side still holds the most potential, or has the focus already begun to shift toward the application side? 1 for hardware, 2 for applications. Let me know your thoughts. And now, moving on to the retail investor frenzy. Has it been rebooted? The SEC's regulatory gift package. Last night, the brokerage sector saw unusual activity with Robinhood, ticker symbol HOOD, surging by over 10%. Some of my thoughts on this. Last night, the SEC, the U.S. Securities and Exchange Commission, approved an amendment to the rules governing day trading for retail investors, significantly lowering the capital threshold required for day traders. Now, this is tantamount to injecting a powerful stimulant into a retail market that has long been dormant. It implies that the market's speculative liquidity is poised for a second surge. The US stock market may be undergoing a subtle yet profound shift, moving away from institutional pricing and toward emotional-driven retail pricing. This is a signal that is extremely easy to overlook. The SEC's decision to lower trading thresholds at a time when the S&P 500 stands at 7,000 points implies that hundreds of millions in hot money are poised to flood back into high leverage instruments. This will significantly amplify market volatility. The unusual price action in HOOD last night reflects institutional players positioning themselves to capitalize on the next wave of retail investor euphoria. So when speculative liquidity runs rampant, market fundamentals are often trampled underfoot by sheer sentiment. So my question to you, now that trading thresholds have been lowered, do you think that the US stock market will become more profitable or simply make it easier for investors to get fleeced? Give me 1 in the comments if you think it'll be more profitable. Give me 2 in the comments if you think it'll be harder to navigate. Again, my question to you is, now that trading thresholds have been lowered, do you think the US stock market will become more profitable or simply make it easier for investors to get completely fleeced? Put 1 in the comments if you think it's going to be more profitable. Put 2 in the comments if you think it's going to be harder to navigate. And now, let's talk about extreme AI-ification. The stunning rally in Allbirds, ticker symbol BIRD, bird. Last night, the market witnessed a truly bizarre phenomenon. The stock price of the budget sneaker brand Allbirds skyrocketed by over 580%. So my thoughts on this: the company announced a complete pivot toward an AI-driven business model. This highlights the current market's extreme irrationality. As long as you dare to jump on the AI bandwagon, capital is willing to launch your stock into the stratosphere. It reminds me of 1999, when simply adding a .com to a company's name was enough to double its valuation. This type of apocalyptic rally, a frenzied catch-up surge, is often a harbinger of an impending bubble burst within that specific sector. And now let's talk about Nvidia, ticker symbol NVDA, the anchor of stability for a 24,000 point NASDAQ last night. Nvidia continued to trade sideways, hovering around the $198 mark. Although it didn't experience the explosive surge seen in previous days, bolstered by positive news from ASML, it successfully anchored the NASDAQ, effectively holding up half the index's weight. So, some of my thoughts on this: the $190 level has now decisively flipped from a resistance point into a strong support zone. The entire market's attention is now fixed on the psychological barrier at $200. If the stock can break through that level tonight, the NASDAQ will be poised to make a direct run toward 25,000 points. So, my question to you is, if Nvidia breaks the $200 mark, would you choose to chase the rally or scale out of your position? Give me a 1 in the comments if you choose to chase the rally, or 2 in the comments to scale out. Holistic overview. Looking in on today's 3 critical market drivers at the open. All things considered, here is what you need to watch for today's pre-market session. The VIX Fear Index. It has retreated to the vicinity of 18.36, and this falls squarely within the greed zone. So remain vigilant against any backlash triggered by geopolitical views. And 10-year US Treasury yields. Currently, yields have pulled back to 4.25%. If this figure does not rebound, the violent rally in tech stocks still has plenty of room to run. Now, the battle for the $100 mark in West Texas Intermediate oil. If oil drops below $95, driven by expectations of a peaceful resolution, energy stocks could face a collective sell-off, causing capital to flow even more heavily to the NASDAQ. I know many of you are currently asking, since Trump says the war is ending soon, should I sell some of my holdings and rotate into tech stocks? Or since Allbirds has surged so much, which company is the next one to be poised for such AI-driven transformation? And these questions, well, they all involve a lot of cross-asset understanding and underlying capital flows, and they're very specific for your own risk and situations. These are topics I don't discuss in detail during a live stream. This is information that I share with my inner circle. If you would like access, just reach out to my assistant, share your positions, share some of what you're doing, and then you will receive more in-depth strategies for the aforementioned areas that I outlined during my market review last night. Now, that wraps up some of the essential insights for today's pre-market session. Again, locate my assistant's contact deals at the bottom of your screen and enter today's access code APR16PRE. And also, mark your calendars for today's live market session at 10 a.m. Follow the S&P's push past the 7,000 point mark. Any subsequent pullback is typically quite sharp. I will be monitoring the market live with you in the stream to help you pinpoint that precise entry opportunity. Okay? Again, stay rational. Remember, when a sneaker company sees its stock price surge fivefold purely on the back of AI hype, your primary concern shouldn't be how much money you're making. It should be how far away you are from the nearest exit. I'm James. I'll see you in the next live stream.